Hello everyone. In this video, I'll explain how to calculate operating income from a trial balance of a company. I will also tell you which items are part of operating income and which items are a part of non-operating income. For this video, let's assume that Panda Corporations operates several factories in the Southeast that manufacture stuffed animals. The December 31st, 2024 year-end trial balance contained the following income statement items. Sales revenue with a credit of $14,300,000, interest revenue with a credit of $68,000, loss on sale of investments with a debit of $118,000, cost of goods sold with a debit of $6,380,000, selling expenses with a debit of $638,000, general and administrative expenses with a debit of $1,700,000, interest expense with a debit of $58,000, research and development expense with a debit of $1,380,000, and income tax expense with a debit of $918,000. From here, we must calculate the company's operating income for the year. So we have operating revenues, total operating revenue, less operating expenses, total operating expenses, and finally, operating income. From the two revenue items on the trial balance, only sales revenue is part of operating income, so we can put that account in its credit balance of $14,300,000 under operating revenues. So sales revenue with a credit of $14,300,000. And then we can put total operating revenue as the same amount as sales revenue because interest revenue is non-operating income. So total operating revenue equals $14,300,000. Interest revenue is non-operating income because it is typically derived from investments or cash from outside the company's many operating activities and is therefore not considered part of operating income. Now onto operating expenses. Firstly, recognize that from the trial balance, loss on sale of investments and interest expense are non-operating items, for the same reasons that interest revenue is a non-operating item. Cost of goods sold, while not an operating expense, is an operating cost and specifically the direct cost of business operations. Some people will categorize it as an operating expense, but either way, it is included in the total operating expenses. Operating expenses are costs tied to core operations but are not tied to revenue production. Cost of goods sold lowers gross profit, which lowers operating income, so we are including it in this calculation. So we can put this account in its debit balance of $6,830,000 under less operating expenses. So, cost of goods sold with a debit balance of $6,830,000. Selling expenses are operating expenses, so put that account in its debit balance of $638,000 under cost of goods sold. General and administrative expenses are also counted as operating expenses, so put that account and its debit balance of $1,700,000 next. Finally, research and development expenses are also operating expenses, so put that account and its debit balance of $1,300,000 last. Add all these expenses together to get total operating expenses, so $6,830,000 plus $638,000 plus $1,700,000 plus $1,380,000, which comes out to $10,548,000 for total operating expenses. From here, subtract the total operating expenses from the total operating revenue, so $14,300,000 minus $10,548,000, which comes out to $3,752,000 for operating income of the Panda Corporation. Something to note is that as interest revenue, loss on sale of investments, and interest expense are all non-operating items, they would be reported in the income statement as other income expense below operating income. Income tax expense, on the other hand, is a line item in the income statement shown after non-operating income expense. And there you have it. I hope this video explained everything you needed to know, but if it didn't, there are plenty of resources out there that go much more in depth than this video. If you ever need a reminder of what operating versus non-operating income is and what accounts count as operating income, you can come back to this video and use it as an example. Thank you all for watching and have a wonderful day.